Thursday, January 12th. Market analysis, Stan Ehrlich. Good morning. About 10 o'clock California time. 3 hours to go till the close. A little bit past the middle of the day. I always start out with the stock market and indexes, and usually the Spider SPY, the S&P 500, and it'll do it again today. I've added some more information here. Normally head and shoulder bottom formations, and this is what I've been talking about the last several days, because if it's true and the market has formed or is in the process of the last stages of forming a head and shoulder bottom, then it's a very big and very bullish, longer term, very important pattern. So here we go. You usually take the lowest low on the first shoulder, which was way back in June 17th, and measure the amount of time until the bottom, October 13th, the October lows. They came out fantastic. Remember, the Ehrlich reversal automated trading system caught the turn the day it happened and bought near the low the next day. Now, since then, you just expand the time frame that you just measured into the future, and you end up landing on February 8th, I believe it is, February 10th, or right in the ballpark, 8, 9, 10. That's the latest that I would expect a low in the price level of 367-ish. But I think actually it's going to happen earlier, and maybe as early as January 16th, which is not very many days from now. But the problem is that's the price level that I think it's going to come down to, which is a pretty damn good 30-point break from here, 31. The problem I've got is that all of what I looked for as of 4 or 5 days ago, when it broke out of the small 3-week trading range, which at the moment is the possible last shoulder low on a very large head and shoulder bottom, that shoulder is earlier than I expected, if it's true, at the proximate price level that I thought it was going to happen at, a little bit higher, and is acting so far like a last shoulder low. It's coming up straight up to the neckline, which is a little bit above the major bear trend line, which I've got on the screen here. But that high on August 16th, opposed to the high that occurred fairly recently, December 13th, those are the 2 points you draw the line across. So just eyeballing it real quick, it's going to be somewhere in the neighborhood of 403-ish in the next day or two. So crossing that level is going to cause some eyebrows to raise in terms of, well, the head and shoulder happened. We're breaking the neckline. We're off and running. I'm just going to give you a wild swag here. From here to, and the 350, okay, to about 350, 70 points higher, 70 points higher. That'll be 470. That'll be testing the all-time high, which is 480. That would be my minimum upside objective if this pattern is a head and shoulder bottom that's about to break out. I don't think so. A couple of reasons. We're almost overbought, just as overbought as we were during several of the rallies that occurred in October, November, December. So it wouldn't surprise me if we were turning down today, but there's not much sign of it. Take a look at the 1-minute chart. We just made new highs for the day. Almost to the, a few ticks new highs for the day. It's not up a lot. 250 is not a lot. 6, 7, 8, 9 and more, that would be a significant amount, and it still could. We got 3 hours almost. So if it can get super strong and stay there, I'm going to have to start flipping from bearish to bullish. But I'll be detailing it as much as I can, obviously, in the days to come. Otherwise, I still have to stick to my bearish opinion, and that's hard to do under circumstances. When you're high and last and it's getting a little stronger than you thought. The old gap is closed. I thought it might. Remember, 393.61 was the exact level. And here we are at 398, 396.61, I think it was, or 31, whatever. We're now about 2 points, a little less than that, higher than what I needed or wanted. And it's still basically in an area where it could stop going up. So on a daily basis, almost overbought. Almost good enough, not quite. Resistance area, all the little upside objectives that I had in mind have come true. I don't see any reason for it turning down at the moment or evidence that it's going to. I got to talk about the DIA and the QQQ real quick. The DIA has practically all the same features, except the head is a little double bottom in itself. The timing is still the same, starting in the last 2 weeks approximately of January to the first week of February. But the price levels are different because it's been the strongest index for a long time than the QQQ, which is the weakest, and I'll show you in a moment, relatively speaking. So the lows there, if it comes back down in the next 2 or 3 weeks, are going to be 322-ish, 323 ballpark. And then I would be very satisfied with the last shoulder low. And QQQs, here we go, have a last shoulder low, which is a little double bottom in the last few weeks. Maybe. The timing is too early, like I was talking about in the Spider and the DIA are all the same timing-wise, a little too early earlier than I expected. So this has almost made a new low for the whole trend. What happens if it makes another set of new lows? It's in jeopardy of making a new low for the whole damn year, the whole damn bear market. But I'm kind of thinking it's going to hold again, but around 254 for 255. Well, we'll see what happens. This is a very significant point. It got up to the resistance level, and it's there right now. So if it was going to stop at any particular level, this is it. High and last at 279.5-ish. So we'll see what happens. Stronger than this doesn't change my opinion yet, but it starts to throw some question marks in the longer term picture. And let's go to futures contracts. But first I want to show you something. Whoops, it's the wrong one. And the ER trading system had a sell signal back on January 9th. That's why the price action on this 1 minute chart is red. It wanted to sell short at the trigger price the next morning, which it did, got a bad fill, but we sold in the first few minutes of trading. Didn't close with a profit or loss the same day, break even, looks like almost exactly. But yesterday, it started to come down very, very nicely and made some money. This morning, it opened sharply lower and caused our system to trigger an offsetting order, and we got out of the trade. It's not a huge profit, but it's pretty nice, $37 stock, and now it's gone up all day long. So there's an example of the ER3 overnight version. There's an ER1. Both versions, 1 and 3, have scalping versions and overnight holding versions. Okay, futures. Now, start out with gold, precious metals. New high close, overbought. Don't run after this. Look for a downside retracement. Then I would be very interested in being a buyer because the longer term trend seems to have changed, past tense. We did catch an excellent buy signal at the beginning of the bottom formation. New high and close since then. I'm expecting a move up maybe to 1950. Okay, next chart is platinum. Yesterday we got a sell signal in ER, bearish engulfing. Everything just the way I like it. Turn the price action red, which is what it's supposed to do. We got extremely close to the high of the day today for a fill, but it didn't hit the ER3 trigger. It closed lower. The signal's starting to work. There's other ways that you can get short or use the system. Next chart. Silver, new high, slightly higher close, sideways trading range, needs to break out one way or the other. Next chart. Corn, we got the high of the move several days ago, 2 weeks ago, came down dramatically well for a couple of days, then bottomed out, and now we have a second bullish engulfing in the last 3 days. So this is probably going to hold, and a challenge at a minimum 685 and probably up to 7701 in the next week or two. Next chart. Cocoa, still friendly, intermediate term still up, trend is up. Sell signal worked for a few days, and I'm looking for new highs. Probably a move up into the 2,800 area. Next, soybean oil. Neutral. We got the low so far, and it's a good rally day. It looks like a new high close for several days, but not a higher high or above the previous highs. That's what I really like. Next, live cattle. Trend is still up. Looking for new highs soon. It has tested support already. I like what I see. Bullish, no pun intended. Next, natural gas. Got oversold, trying to bounce a little. Minor bottom formation developing. Probably I'd look to sell a rally, put on new shorts on a rally. I wouldn't trust the long side of it very much. High grade copper, now fourth day overbought. Now also pressing historical resistance. Probably about to turn back down next week, very early next week on Monday maybe, or tomorrow, which is Friday. Next, wheat. Support's trying to hold, doing a decent job of it for a couple of days. It might bounce again up to 804. I'm bearish. Next, live hogs, now oversold in the last 3 days out of 4 days. And I'm looking for a bounce, but the trend is ambiguous to down. Next, coffee, broken a new low ground, got oversold. I'd sell it short on a rally up to 155-ish. Next, OJ, neutral. Next, soybeans, neutral. Next, heating oil, same thing, unfortunately. Sideways, big long-term sideways trading range. And the same thing is for, well, now the E-mini is something different. Remember, this is a stock market index as well as a futures contract, the ES. And my comments that I made early on the S&P 500 SPY, Spider, are exactly the same, different numbers, but the support resistance levels, et cetera, and with some nuances like this doesn't gap as often because it's open many more hours a day than the Spider. And when you're closed many hours, that allows the gaps to happen. We did get our October 13th bottom of the market, the low day, and that's giving you warnings, 2 buy signals that didn't work real well. Well, one of them worked pretty well just prior. So that's it. Thanks. Have a great trading day tomorrow. Bye-bye.